Would you like to qualify for a mortgage without having an income? Would you like to get into the real estate game without first having a job? Fortunately for you, there is something called the DSCR loan. The DSCR stands for Debt Servicing Coverage Ratio. In this video, we're going to look at what a DSCR loan is and how you can use it to get started in real estate. DSCR loans allow you to qualify for a loan based solely on the cash flow generated from the target investment property. So the goal is for rental property, and a DSCR loan won't work if you plan to live in this property. Unlike a traditional mortgage loan that looks at your work history, a DSCR loan doesn't look at that. DSCR loans can be used to finance either residential or commercial property, whatever can create rental income. Debt service coverage ratio is the ratio of cash available to service your debts. How much cash is there that can pay your loan? The ratio itself compares the property's net operating income (NOI) with the mortgage debt service on an annual basis. This gives the lender insight into whether you have access to enough cash flow to pay back your loan. If you have a high ratio, lenders will feel more comfortable with you paying back your loan. DSCR is calculated by dividing your NOI by your annual loan payment. NOI is basically your profit after all your operating costs are removed from your rental income. Here's an example. Your lender needs to see if you can qualify for a DSCR loan, so they need some information on the property. You realistically project that your NOI per year will be $100,000. The lender figures the loan terms and see that your debt service will require you to pay them $40,000 per year on the loan. $100,000 divided by $40,000 equals 2.5. Your DSCR will be 2.5. What that 2.5 means is that you'll be able to cover your yearly debt 2.5 times given your NOI. The higher the ratio, the more the lender feels safe giving you a loan. A higher DSCR will also give you more leverage in asking for more money on more loans. But is 2.5 a good ratio for a DSCR loan? Most lenders require you to have a ratio higher than 1. Anything lower than 1 means your NOI won't even be enough to cover your loan. Many require the minimum to be 1.25. That 0.25 gives the lender some margin of safety. The higher, the better. Now, you should know that DSCR loans aren't for single-family homes. They're usually borrowed to buy apartments, office buildings, and hotels and resorts. If one type of property is seen as risky, office property during the pandemic for instance, lenders will often reject giving you a DSCR loan. On the other hand, if a property type is attractive, your lender may only require a smaller ratio. A typical DSCR loan usually has a limit of $5 million. But before you get into the real estate game with the DSCR loan, you'll need to know the pros and cons of getting one. First, lenders don't consider your personal income because it's all about how much your property will generate in cash flow. Second, DSCR loans are fast and the process is simple because you don't need to submit any work history. And third, unlike other real estate loans, you can commit to more than one property at the same time. Each property is considered separate, and if you wanted to scale your real estate empire, you could with many DSCR loans. But with the good comes the not so good with DSCR loans. First, you still have to make a down payment, 20 to 25% on your DSCR loan. There's no getting away from there. Second, many qualified DSCR loan properties cost more than $5 million, but most DSCR loans have a limit they can lend out to only $5 million. It's no harder to get DSCR loan than a regular real estate loan, but you need to be aware of how you're going to go about it. If you have a solid real estate deal that will pass the ratio test of a DSCR loan and you have the down payments, you're all ready to go. It's a myth you need to hold a stable job to get started in real estate. Real estate investing is one of the best ways to create generational wealth, and perhaps a DSCR loan is what you're looking for. So what are your thoughts? How are you going to get into the real estate game? Comment below. And as always, take care of your money.